Hello everyone, this is riskier from myinvestmentidiots.com. Today we are going to discuss about this SBI ETF Private Bank, which is a new ETF launched by SBI. Is this not a riskier ETF? Before we get into the ETF issue details, let us talk about what exactly is this private bank ETF. So private bank index generally tracks the underlying stocks. So if you see this NIFTY Private Bank Index has 10 stocks from the private banking sector. So this private bank ETF will invest in this private bank index of NIFTY, which majorly and minorly it invests a small component in debt related instruments also. Now let us talk about what does this NIFTY Private Bank Index really consist of. Okay, so if you see the underlying banks, there are 10 major banks, but if we go with the 80-20 rule, 80% of the portfolio is only for 4 banks, which is HDFC Bank, ICICI Bank, Kotak Bank, and Axis Bank, and remaining 20%, if you see, there are another 6 banks, which is IndusInd Bank, Federal Bank, Bandhan Bank, CUB, RBL Bank, and IDFC First Bank. So if we see the this index performance majorly driven by that 80-20 rule, if you see the 4 major banks. So based on the performance of these 4 major banks, your the returns from this index can fluctuate. Now let us get into the issue details of SBI ETF Private Bank. So the objective is to invest in the stocks, in the underlying index stocks, subject to tracking error, and the fund manager is Mr. Harsh Sethi. Sorry. And the issue details, if we come, this ETF is going to open on 6th October and it's going to close on 13th October. And minimum lump sum investment is 5,000 rupees. There is no entry or exit load. It's categorized as a high risk ETF, and the expense ratio is 1%. And the benchmark of this ETF is NIFTY Private Bank TRI. Now let us talk about the allocation pattern. This ETF is going to invest 95 to 100% in securities or stocks of NIFTY Private Bank Index. So this segment is high risk. It also invests up to 5% in debt securities and money market instruments. So this is a low risk profile. Let us talk about some of the reasons why one can invest in this private bank ETF. So these ETFs would invest and reflect the underlying index performance. So if you think this private banks are going to do well in the coming years, then you can just go and invest in this ETF. And if you observe, the NIFTY Private Bank Index actually outperformed in the last couple of decades. So it's going to expected to continue to grow in future too. And this ETF generally comes with a low expense ratio. So ETFs will invest in the underlying stocks. So the fund manager will have less activities of analyzing the stocks and investing in perfect stocks kind of thing, right? So these ETFs will invest in the underlying stocks. Whether they are doing good, bad, it's immaterial. So hence the expense ratio generally is low here. So your returns on your ETF will be higher. Now let us talk about some of the risk factors. So if you see COVID-19 crisis, many small, medium business actually have already collapsed, and many of them are yet to revive. And there could be increase in the loan defaults and there could be a dramatic increase in the NPAs of the bank. This would put pressure on the bank's margins. And if you see, investing in bank ETF is like investing in a single sector, like it's a banking sector. So if the banking sector is in downtrend, then it will reflect in your this index too. And if you see, there was a banking sector crisis in 2008, and assume that if it is repeated again, then your investment can wash away. So these are some of the risk factors of investing in this ETF. Now let's talk about the performance of private bank index. So if you see the last 15-20 years, it has been doing well. But if you see, say 2006 to say 2015, it has been doing extremely well. But just observe from 2015 to 2020, though it has done well, but now post COVID, it has actually fallen and it is yet to recover. So till the time we may see lower returns for some time. Let's check about some of the performance of the existing private bank ETFs. There are only 2 private bank ETFs as of today, ICICI Private Bank ETF and NIFTY, Tata NIFTY Private Bank ETF. If you see, the returns actually are negative, majorly because of the stocks that have fallen post-COVID crisis. But if you see in the last 6 months, it's actually recovered to some extent, but we're yet to see the full revival. Now, is this not a riskier ETF? So if you see, this ETF invest in NIFTY Private Bank Index, and this has been outperforming in the last 2 decades. But the trend is going to affect it because of this COVID-19 pandemic, where several businesses are getting shut down or in the process of getting shut down. See, the loan defaults and all these things will get a clarity, because currently in the last 6 months there is a loan moratorium happening, and many businesses are sustained with that. But once this loan moratorium everything is over, now when business start paying out the loans and everything, then we'll get a clarity. But this uncertainty will continue for some time, till the time we are going to find this virus vaccine. But if you see on the other side, this private banking index actually is available at 30% lower level compared to your pre-COVID level. So if you see, the financial markets actually recovered in the last 6 months. Maybe whatever you call it as, it's artificial inflation, whatever you call it as. But putting away fundamentals, the stock market has actually recovered. But still, the banking sector is yet to recover. So we could see some potential there. So if you are a high risk investor but willing to invest for say 8 to 10 years, then definitely you can go and invest in this private bank ETF. But if you talk about short to medium term, we don't know really, right? Because the loan defaults can happen, the NPAs can increase. So one may not expect any good returns in the short to medium term. Alternatively, you can invest in some of the banking mutual funds that invest in both private as well as public sector banks, that can provide higher returns compared to the ETFs in a medium to long term. If you have any queries, reach out to me, Suresh at myinvestmentedge.com. Thank you.